with our trading for today. So today, today is Tuesday, the 18th of January. So prior to 9:30, we have to trade cautiously because of the report coming out at 9:30. We'll meet 10 minutes before that at 9:20. So if you're a very cautious trader, you could just keep out of the market altogether and just wait till 9:30 before you trade. Well, I usually place a cautious trade prior to that coming out in case the market trends, but just one. I usually hope that order is not taken, but if it's taken and I lose out, I just stop trading until the report comes out. And then we've got, I think that's the only report of high importance today. And the other ones are of medium importance, the Euro Economic Sentiment Report and the US long-term TIC flows. Apart from the Canadian bank rate decision, which won't affect the market we are looking at, the Euro-US dollar. So we'll go to the one-year daily chart. We'll start off looking for swing trading opportunities. And we can see that the market is currently trending sideways. You can see it's not making higher highs and higher lows or lower lows and lower highs. So because it's not doing that, it's just trending sideways. So it just put a line above the high of the sideways trend and the low. So ideally, it would be best to avoid trading within that sideways trend from a swing trading point of view. So by the moment, you can see where the market is. So if the market goes up, hits that high, and comes back down and forms a resistance in the market, then you can use the resistance to trade. Obviously, if it falls back down, forms a support, and goes back up, you can use the support to trade. But in the meantime, you try and keep out from trading within a sideways trend. And the next possible swing trading opportunity would be at the Fibonacci retracement, unless the market forms a resistance itself at that point. So let's go to the 2-day 5-minute chart. So 2 days 5 minutes. So we can see, oops. So this is the 2 days 5 minutes chart for the Euro-US dollar. You can see yesterday was trending sideways due to the public holiday, was all over the place. But this morning you can see it's beginning to trend. It's broken the pivot point. You could have bought there this morning. Remember, the pivot points come out at midnight. So you can technically start trading from midnight once the pivot points come out. So when you're trading on your own, you can decide what times you trade, when you trade. Like I said, we're just meeting at 6:45 for academic purposes, but nothing stops you when you're trading on your own to start trading from midnight or 5 o'clock in the morning. I'm usually up 5:30 in the morning, and I usually trade at midnight before I go to bed. But you decide as a trader when you want to trade and how you want to trade once you establish your trading plan. So the market has broken the pivot point there. If you'd bought there from midnight or early hours of this morning, obviously the market has moved more than 30 points, so you can move your stop to the opening level. And obviously, if you're already in the trade, in this buy trade, and you've moved your stop, then you don't place any more orders. But if you haven't placed a trade, obviously it's quite straightforward again. If you haven't placed a trade, you can see that the moving average 50 has also crossed above the pivot point. So we can sell just below the pivot point. The pivot point here is 13,302, so we can sell at 13,300, 2 points below that. So the market falls, comes all the way down and breaks the pivot point, we're happy to sell. If it keeps going up and breaks the first resistance, and you can see the resistance there, 13,360. So we can buy at 13,362, just about 2 points above that to buy, and then in between we keep out. So that will be our pending orders. If you haven't bought, if you've already bought at the pivot point, obviously you remove it, make sure you've moved your stop to the opening level. If you bought, obviously you don't place any more trades, just wait and see what happens to that order you've placed. If you haven't placed a trade, then the point where you can trade will be just above the first resistance to buy if it breaks the first resistance, and to sell just below the pivot point if the market collapses and falls. So those will be our pending orders for this morning on the Euro US dollar. And then we'll meet again, like I said, at 9:20, just before the report comes out, to see what happens in the market. And remember, we're only going to be trading once before the report comes out. So if the market takes any one of your orders, you make sure you delete the other order, and if you lose out on your trade, you make sure you don't trade again until after the report comes out. Any questions on that?